Hello, this is Brian Shannon from AlphaTrends.net. Today is Tuesday, the 10th of June, 2008, and the market closed with a loss today, the S&P 500 that is, of 64 cents, or just about a half a percent. First thing I want to point out here is yesterday I had shown how the market was higher but had that red candle. Well, today it was lower and had a green candle. Most people think, or a lot of people think, that a green candle means it was a positive session or that the prices were higher. Candlestick analysis uses from the opening price to the close. So the open price, if, for instance, in the case of the S&P 500, was approximately right here, whereas the close at 136.06 was higher than the open. So that means it was a positive session controlled by the buyers when you look at a daily time frame as far as the candlestick goes. But how can the buyers be in control when it was down 59 cents? Well, the point is it means that basically the market closed higher than where it opened, and during the course of the day the sentiment changed is the way you want to look at it. The better way to look at it, really, instead of relying so much on candlestick analysis, and I had a few questions about candlesticks and how I used them last night, is that you want to, what's more important than memorizing candlestick patterns and that sort of thing, is to look at shorter term time frames and see exactly what happened. If we want to know what happened today, the best way to find out is to look at the action of today only, and you can see that the market opened lower here today, but right from the beginning the buyers were pretty much in control. They and then it was kind of chopping around near that daily VWAP in here. So pretty uneventful day basically, but where we are in the context of the bigger picture is that we've still got this pattern of lower highs and lower lows. And here, yesterday's lows were tested, or came close to being tested, but the market held above those lows. More importantly, though, they do remain below this area where we're expecting to see that larger level of resistance at the 137 to 137.5 level, and really to get a better perspective of that, here that's 137 and this is about 137.5. So this is the larger band of potential resistance. Market prices have memory because the participants have memory, and support broken tends to act as resistance. One other thing I wanted to point out here is if you take the lows from April 11th to the recent highs, you can see that we've retraced more than 2/3 of that, and that means basically that that this move has failed. But more importantly, again, than Fibonacci or candlesticks or a moving average, is what is price action telling you? Price action continues to say that the buyers are in trouble here, and looking at, for instance, a 5-minute time frame, market trying to stabilize in here a little bit, did briefly break to a higher high right here, but with a declining 5-day moving average, it's tough to trust these rally attempts, and the sellers did come back into the market here late in the day. Now we're kind of looking at this trend line here that's developed off of yesterday's lows and then today. So it could be that we're setting up for another drive lower that could bring it to lower lows. So you still have to exercise a lot of caution in this environment. The market clearly continues to have bigger trouble, and again, let's look at this 2-hour chart. That is each candle in here is 120 minutes of time. We've got this bigger pattern that's broken down on the head and shoulders, which indicates, again, just to show you we take the height of the pattern, which is 144, down to the neckline at 137. So the height of this pattern is 7 points. We subtract 7 points from the point where it broke down, which is about 137.5. That gives us a downward objective near about 130.5. I got a question saying, do I think that's going to happen by the end of the month? Basically, it'll happen, if it happens. When it happens is up to the market. What we want to do is focus on the trends of these shorter term time frames and look for a tradable edge. And right now, again, this market, in the intermediate term, guilty till proven innocent, as long as it's below that declining 5-day moving average. And now we've got the 10 below the 20, the 10 breaking below the 50. That 50's flattened out. So there's just a lot of reason continued caution in here. The financials did probe lower, not make a lower low, but closed with a little bit of a gain here today. So perhaps that takes a little bit of pressure off short term, but clearly just a terrible downtrend in here, and picking a bottom is not advisable in this market. The semiconductors were down 50 cents. They're touching on their 50-day moving average, and some support. They're trying to hold at about 31 and a quarter or so. So keep your eyes on that 31 and a quarter level. Odds don't favor a large breakdown right now with a rising 50-day moving average. Instead, maybe more likely to see a bounce back up towards 32 and a half. The Russell 2000 was down 54 cents today. It looks like there's a bad print in there on this chart, but we did not break this trend line as that bad print would suggest, or maybe we did. Let me take a closer look at that. Down 54 cents. Looks like today's low. Let's just, I don't know what to trust in here, and that's kind of annoying. Good thing that they clean those prices up at the end of each day, but looking at this hourly time frame, you can see this market is really trying to find some support right along this trend line right here, and that corresponds with the trend line that we're seeing on the daily time frame as well. So it's just kind of hanging near that trend line. It's above a rising 50-day moving average, so we've got the more important level of potential for support is 72. Breaking below that and staying below it for a day or two might invalidate this whole rally that we've seen from the March lows, but again, nothing suggesting that at this point yet. You do have to remember the and you don't necessarily want to trade based on what you see on this weekly time frame, but you want to keep in mind the larger the relevance of this larger time frame in this price in here near the $75 level, where the market recently was rejected from. It's back below the declining 200-day moving average, and on a 30-minute time frame, again, looks like it's trying to stabilize. If we look a little bit more closely, and let me just change the scaling in here so we can see it a little bit more clearly, we do have a declining 5-day moving average. Short term, the level where sellers have been found has been about $73.70. Getting above that, maybe they can squeeze them up towards that 5-day moving average a little bit. But the more important level of support for this market is again found probably right down here, just about $71.80, $72 a share. And if we were to deteriorate down there, I think we would at least probably hold up for the first test or two before a larger breakdown comes. And again, the NASDAQ 100 is yesterday we saw in here that this trend line was broken, and that doesn't mean, again, it doesn't mean that the uptrend is over. It means it means that the nice neat line that was confining the trend has now been touched, and that gets a lot of people's attention. So we need to pay attention to it, because it means that the rate of change has slowed and that the market is due to correct. Markets either correct price-wise or through time, and it looks like with the important level of support at 47.75 and a rising 50-day moving average, that the market will probably bounce around in here. I'm not expecting a large breakdown, but I always want to be alert for a large breakdown, because if you're prepared for anything and expect nothing, then you'll never truly be surprised, and you shouldn't find yourself with large open losses as you weren't prepared for the worst case scenario all the time. Risk management is our #1 job. On the 10-minute time frame, we're seeing in here that this market has this little trend line that might get some people's attention on a break tomorrow below 48.30 or so. So pay attention to that. Then it could put in another test of that 47.75 level. A test down near 47.75. Here we can see it even more clearly on the hourly time frame, the significance of this level. It was resistance here, then tested as support 1, 2, 3 times. One more test down here, and we've got the potential that we've got that rule of 4, meaning the fourth test of a trend line or support often breaks. So you want to continue to be on high alert. A declining 5-day moving average says be careful. So right now the daily time frame suggests a larger breakdown isn't coming, but the hourly time frame is worrisome enough that you have to be alert for it. We've got declining volume here on this rally attempt. This market isn't able to find much upside when it rallies, so there's clearly still a lot of danger in this market, and you've got to be careful.